Hello, and welcome back to episode 30 of Crypto. My God, markets aren't looking so great, so let's talk about hope for the future. I'm not going to get into the meme coins today. I'm not going to go into the scams and all of the excitement that happens around that clusterfuck, which is theft and disrespect and rug pulls and all that crap, which has really come to the head of our industry. But there are some amazing things happening that are a little bit more slow to churn with long tail effects that are hugely profound. That is, of course, regulations. So let's hop into it. Now, unfortunately, a lot of the shitstorm that we find ourselves is actually due to the regulatory impact of the last 4 years under the Biden admin, along partners like Elizabeth Warren, who has been so aggressive against this industry that she announced an army. And we've seen collusion with FTX prior to its collapse, all sorts of very weird, strange overlaps. And of course, Sam Bankman-Fried's parents were very close to the lead regulator for the past 4 years, Mr. Gary Gensler. This is probably public enemy number one. I would personally consider his efforts to be close to terrorism, given that the fact that he put such a negative impact on this burgeoning industry, which had so many hopes for a younger generation that had seen and missed out on asset classes like the housing market, like good jobs, right? We are a post-2008 society, the millennials and below, and just the opportunities are not the same for us. So cryptocurrency comes along, decides that it's going to redefine the financial institution. It's going to do it in a digitally native way. Perfect setup for the internet generation. But Gary comes in here and he actually uses his regulation to force non-regulation. I know that's a crazy concept, but he was so aggressive with his mechanisms that it actually created an unregulated environment. Basically, his actions made it so that they would come after you for anything that happened inside of the cryptocurrency industry. They created an opaqueness, a lack of rules. This pushed everyone away from trying to create any sort of business of worth, of value, out of fear of litigation, out of fear of losing their family, their homes, going to jail, anything deeper, right? The panic was very real. We saw developers want to leave this industry to go to other ones in technology, to leave this country, to go to other ones that are much more scrupulous, but had a more open and welcoming aura and approach to cryptocurrency. And in a nutshell, I mean, this man is the reason that meme coins are so popular, because it became so impossible to launch any sort of company of worth, right? To me, in my opinion, the value set of a blockchain-based product and project is to create an autonomous business, one that does not use intermediaries for financial transactions. It uses code, one that can self-facilitate the profit-making mechanisms of the business itself, whether that be capturing fees on trades, token swaps, permitting perpetuals, options exchange, market-based dynamics. I mean, we can begin as we actually explore and build these companies to say, how can we apply, the DeFi fee generation models, which is really where fees are coming from these days, and put those on top of a social network layer, applications, right? Those explorations in healthy business mechanics beget more healthy businesses. Now, Gary came along and said, well, if there's any sort of revenue share, any flow, you're going to fall into this very sketchy crypto securities landscape, and we're going to come after you for violating securities laws. At the same time, the securities laws and the tax laws and all the second order magnitudes that came from the confidence of the SEC taking charge here, they all created a world where these rule sets just did not work, right? The fact of the matter is the old world is built on regulating intermediaries, the people that are in between all of the transactions. That's where the regulation happens. And cryptocurrencies and blockchains specifically remove intermediaries. That is the whole concept. These are handled by algorithms. They're pre-programmed. You know that the input of X plus Y is going to be Z. That is written in the math of the program itself. So these are predefined outputs. And that is the fundamental concept. And what they did was force it into a way that was just impossible to comply by saying, we regulate you on the intermediaries, but there are no intermediaries. How do you get over this? No one knew. There was no explanation. It went even further in its craziness when the announcement of this Prometheum came into existence. The only people that had the digital asset special broker dealer's license, right, this thing a broker-dealer is one of those intermediary that help facilitate financial transactions. They receive the only license to do this with crypto, to trade crypto securities. Of course, they're an exchange, and there are no such thing as crypto securities because they were not defined, so there weren't even assets on this exchange, right? Bitcoin was not a security. Ethereum, they tried to say it was, but it was never proven. XRP, they tried to say it was, but they're fighting back. So you have these licensed humans that are the only ones capable of trading these crypto securities, and their exchange has no securities on it because they don't exist. And one of the weirdest things about Prometheum and the whole ordeal is that you have this weird villainous man, Aaron Kaplan, who just looks like your standard nefarious Disney villain. And the Prometheum team is him, his brother, his father. Like, it's the weirdest summation. Now, nobody in the cryptocurrency sphere actually knew who these people were. So you've got this regulator, Gary Gensler. He gives this special permission to these funky dudes that no one recognizes, and they come out of nowhere trading nothing, and it's just a head scratcher. Now, as a result, Gary Gensler obviously made a big bet against Donald Trump, following into the Democrat camp. They went all in on their anti-crypto army. This allowed Trump to gain tons of votes. Actually, the votes that he won on were the same number, give or take, as the number of cryptocurrency voters. This is where I get so aggressive towards Gary Gensler. Not only did he give us meme coins, but if Trump ends up dismantling the United States of America through his aggressive policies, I blame Gary Gensler largely for that victory as well. A lot of guilt and bullshit falls at this man's feet, and it is nice to see that Gemini at least came out and said they will not hire MIT grads unless the university drops ex-SEC chair Gensler, and that's because he went over to be a professor, and that is honestly insane. So there is some recourse here. Now, what I really want to talk about in this episode is the upside, right? Gensler's gone. We don't need to think about him. We do need to remember not to hire anyone that comes out of Gensler's camp or his theory, but at least now we have some hope in the form of Hester Peirce. I've talked about her before. She has now stepped up to the head of the crypto task force, and unlike Gary Gensler and a couple other of her SEC fellow commissioners, Hester has been very active in the cryptocurrency space for many years. She put out her first proposal for a safe harbor in 2020. She was sworn in on 2018, so we can see that she's really been active since actually joining the commission, and she puts out proposals on GitHub. GitHub is where software developers release their code and store it in a public fashion that anyone can look at. So we can see that she's really been a deep and committed person for a long time. Now, this is coming from 2020, running on empty, a proposal to fill the gap between regulation and decentralization. This is what it comes down to. The main value of having a token, there's really no token utility outside of operating a decentralized protocol. That means if you're looking at a token and you can take it away and you think the product can still operate, it can actually churn, then there's no reason for that token. A token is there to incentivize participants in a decentralized ecosystem to actually contribute, to either provide compute power, to provide brain power, to provide capital resources, all in the hopes that they earn back this token and that there is a financial upside for their efforts. This is why tokens exist in a cryptocurrency world. Now, of course, decentralization could not really work out under the previous regime because the process of decentralization does take a moment. Teams come out with an idea. Obviously, it's centralized at that point. Centralized in one person's brain, then it becomes a white paper, then it becomes a team, then it becomes a tech platform. Now, even once that tech platform is launched, it takes time to spread out the token holdings, right? Decentralization is not just in the operations of the network, it's in the amount of people that hold the tokens. It's in the amount of people that validate the blocks on a specific chain. So all of this takes a moment to go from centralization to decentralization. And when you had an enforcement agency that just crushed you for any semblance of centralization, people were very scared of that buffer period, that moment between when you might launch an asset and be considered a security and just get the wrath of God to fall down upon you versus that timeline to actually move towards decentralization. I would say in many ways this fear actually made people give up on the concept entirely and just say, hey, I can continue to operate this business. I might just move to Dubai and do just that. One of the other difficult elements of decentralization, and something that is very counterintuitive to a standard business model, is that you essentially have to create a business to give it away. This is a hard concept for anyone that's ever gone through the entrepreneurial slog. It's very difficult. It takes years off your life. And to say, hey, now that you finally made this thing, it's time to step away. I mean, this is very counterintuitive. Now, the other thing that's a bit different is that the general funnel of capital is completely inverted in a decentralized system. So in any sort of business, you create a funnel where all the product and the revenue flows to the equity of the business, right? The core of the business itself is capturing value. Inside a distributed ecosystem, you need to make sure that that value is going outwards to all the participants. So it is a bit of a different framework. And once you put a little regulatory barrier over it that adds fear of real repercussions, jail time being the worst, well, screw decentralization, right? People start to give up on it. They start to shift. And of course, they start to launch meme coins because, hey, there's no central concept to a meme coin. It's just a dumb meme. It didn't mean anything. And that's how we got to where we are. So now after 2020, this is really the release of Hester's Safe Harbor proposal number 1. We're seeing this proposal to fill the gap, not quite hitting the marks that people are looking for. So within just 1 year, she actually takes into account the industry's feedback, talks to people, and releases Token Safe Harbor Proposal 2.0. This is from 2021, guys. This is 4 years ago in April. I mean, this is nuts. We've had 4 years in an industry that moves at the speed of light. To quote Interstellar, 1 hour on that planet equals 7 years on Earth, right? This is how quickly cryptocurrency moves, how fast these developers develop, and we've had 4 years of stagnation. It's quite mind-blowing. Now, the Safe Harbor Proposal 2 is quite amazing. It really does seek to add in that period that I described of going from a token launch to decentralization. She puts in a 3-year buffer. And the kicker is that you can release tokens. However, there are some roles and responsibilities, right? This is what regulation is for, to make sure that you're not grifting, that you're not rug pulling your investors. So there's a time-limited exemption, as I mentioned. We're looking at this period of time where people can transition. And what they require is that the centralized teams that do launch a token, they need to announce this to the SEC, right? They need to make them aware. Step 1. They need to maintain updated information. What's happening with the tokens? What are the next steps? What are the plans? There needs to be real thought behind these products. If you're going to decentralize, if you're going to make this revenue and distribute it back to the community, let us know how it's happening. And also let us know the steps for that decentralization process. This means you have to set up governance for the token holders to take control of, right? Maybe it's a DAO framework. Maybe it's a proof of work node operation like it is in Bitcoin, where the miners are the actual voters on the protocol. But all of this needs to come to light. And that's really, really healthy because it lays out everything here in writing, right? We have the disclosures, and let's just start at the top. The initial development team needs to start the disclosures, right? They're required under a paragraph. The token must be offered and sold for the purpose of facilitating access to, participation on, or the development of the network. Initial team fires notice of reliance, an exit report. We have initial disclosures, right? The source code, the transaction history, the token economics, information detailing the method of generating or mining tokens. This means if they sell you tokens, they can't just come out saying, hey, we've been mining in the back, right? Like a pre-mint or something like this. A hyperlink to a block explorer, an explanation of governance mechanisms, right? Like these are all very reasonable things to have a framework for launching real tokens. Guys, this is juicy because this is happening now. We are moving away from the meme coin mania, as crazy as that might look, especially given my last video. And the wheels turn slowly when you're doing real work. You know, obviously time is required, but we are finally having a regulated framework. And it's so wild to me that the last 4 years of hyper-regulation were in fact no regulation. So for the first time, we're getting authentic, healthy regulation. This is really useful. This will help people build good product that is decentralized, that has tokens that generate revenue, that hopefully can go up rather than being these exit liquidity events. So this is all really, really thrilling. And of course, we now get back to the modern time, February 4th, 2025. Hester comes out with The Journey Begins. And this is really a piece coming through the SEC's website that covers a few things. Basically, whenever you're dealing with legal, first and foremost, these views are my own. Just like the views on this video are my own and not representative of anyone else, Hester is saying she is going to continue to speak about the cryptocurrency industry. They are going to be her views and not reflective on the SEC, even though she works there and has influence to help them become something material, but that has to happen through due process. Secondly, she's saying time. It took us a long time to get into this mess. It's going to take us a long time to get out. That there's limited resources at the SEC, that they know people are going to pounce on this opportunity, and that they're going to be overwhelmed. All of this is really goes into, if you want to get moving, help us help you by being prepared. Number 3, she gets into the task force will want to travel to destinations, yada, 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 essentially saying that they want to create regulations that allow builders to build. Number 4 over here, basically announcing, look, there's gonna be rules, and if you break them, we're going to enforce against you. I think this is very fair. Previously, they were going to enforce against rules that nobody understood. So this was like playing a game of football, but without any of the rules being clear. So you're getting flagged, you're getting penalties, but no one understands why because the refs are making it up as they go. That's what we had previously. Now we're going to have a clear set of rules, and she's announcing, guys, this isn't YOLO. This isn't open season. Like, you need to follow the rules or we're going to come after you and get you. Number 5, another one about kind of time and dynamics of this, which is that the staff's working on it. And it will be helpful if you bring your own legal opinions, your own arguments that are concise, that are cogent. And it ends with being first in the door may not mean being first out the door. So, pretty straightforward, guys. Help us help you. And last but not least, I think, a major one, she's saying, look, just because we're doing all of this, just because a coin goes through the SEC processes and isn't getting slammed or isn't getting hit, we're not endorsing these coins, guys. We're giving you a regulated framework. You still got to do your own research. So all of that's super thrilling. And, we're now with all of the updates around the government and everything happening. Hester is really going out and doing her rounds on a variety of podcasts and shows and trying to make it clear 2 things. 1, that there will be appropriate regulation and that builders inside of the United States can build robust, autonomous networks that actually do take in revenue, that can share revenue, and can build a healthy business model with healthy governance in a decentralized way. I think it's just really nicely summed up in this very tiny tweet by Alex Thorne of Galaxy Digital, where he says, with no regulated pathway for issuance, new token launches have mostly bifurcated between 2 unpalatable options, right? The useless fast rugs and scams, meme coins, or the low-float, high-FTV slow rugs, the VC coins. Now, what if there were an ICO 2.0? In my opinion, the 2017 ICOs of Ethereum, while also being largely memes, many of them were just napkins that raised capital, we also see some of the most utilized products in the entire cryptocurrency space, like Aave, like Synthetics, a whole slew of DeFi protocols, and just very active, high-utility teams that actually did follow through on their initial agenda. Of course, Solana went through an ICO process, and all of these raised significantly less money than we see in these extremely highly valued venture capital rounds. So it's been wild to watch 2 things happen in this regulatory moat, which is 1, people turned towards memes because they said, look, there's no central business here. There's nothing really of substance. It's just a stupid meme. And look at where that got us. And also the return and leaning towards the traditional venture capital model of overly valued private rounds that did not give the initial users, or actually the real users, the organic public, access to these things at an early stage. This was the whole point of the Ethereum ICO, was capital formation that permitted real retail users to get in on these juicy deals. Of course, that quickly fell into accredited investor laws. You needed to either have $1 million, make $200,000 a year, or just be rich in a variety of ways. That was the only way to invest in these early rounds. That moved it over to venture capital. Venture capital raised a ton of money, and they said, we have to deploy this money. The way a VC fund works is they operate inside a vintage, so a closed period of time, usually around 7 years or so. That would be a long time to deploy the money. So they raise all this money, they have to spend it in a certain time, and they give it to founders and they pump up the valuations. A higher valuation means that there's going to be more sell pressure. It's just simple as that. So when these high valuation coins hit the market, retail is, again, exit liquidity unless of course, you're trading on coins from way back in the day that maybe have already vested all of their private sale interests. This is where, again, I implore you to all look at older assets that have a real product now. I think some of those 2017 projects, some of the 2021 DeFi wave, a lot of their investors have exited. The private rounds have sold. They're finding actual price floors, right? True price according to the market, and they generate revenue. So if those coins that have no longer private holders involved and they're generating revenue and they're buying back their own token, this is key, we're starting to see what I think is a value sector inside of crypto. This is interesting, and obviously things like this take time to mature. I do think there's a lot of hope for this industry. We have amazing adoption of Bitcoin on the sovereign level, and now we have, for everything else, the application level, we have a framework to build and to actually launch good stuff. So this will take some time, but it will come out and we'll start to see really amazing founders build really amazing product. And this is all healthy and good because the scams do nothing for us in moving anything forward. And quite frankly, I think we're all tired of it. So with that being said, good luck out there. And my best hopes that we get some clarity and move forward to build this industry from just a YOLO fanboy reply guy kind of world into something that you could actually be proud to be involved in. Good luck, and I'll see you later.